Alright, hope everyone's doing well. It's going to be a very short video, and as always, I'm going to discuss always in first, just to give an overview. Again, I talk about always in because it's a great way to outline a day. And this day never went always in short. You know, no big bear bars here, no consecutive big bear bars, so I see this leg in the trading range. I would not want to necessarily sell down here. Bar one always in long. Buy for any reason. Here, what are the odds of a second leg trap? I don't think they're that great. I think that sorry about that. Yeah, it'd have been a different story if this bar would have been a bear bar closing on its low right here. However, after two consecutive follow-through bars, it dramatically lowers the odds of a second leg down and increases the odds of lowers the odds of a second leg trap, increases the odds of a second leg up. This is a parabolic wedge, 1, 2, and 3, so it damages the case for the bulls. We went up too far too fast. This is also a very interesting thing that happens pretty frequently. Just on a side note. So with always in long, this is a day where we never really win always in short. And again, for people questioning, how does always in help you? It helps you. Well, actually, I was wrong about that. It helps you because if you can figure out, right here, we have a strong rally. Okay, therefore, if we have a strong rally, the odds are very high. We've seen the low of the day. So any sell-off will probably be bought at some point. So if you buy here and scale in all the way down to here, you're probably going to make money. I used the example in my prior video. If you bought here, bought more above this bar over here, you got out of break even. If you bought here and bought more lower, guess what? You got out here. So that happens a lot. And the traders that see this going up, what they're doing is they're buying and they're using the really wide stop and they're saying, hey, the really good traders, again, this is just perception. Plenty of traders are great but never scale in. Plenty of traders will trade super small and scale in lower, scale in more lower, and get out of break even here. So, what happened over here? Well, if I bought this close right here, let's say I buy this close, and who knows, maybe I didn't get out over here. Maybe I'm looking to buy a deeper pullback, like a 33% pullback. So if this is, let's just pretend this is a 30, I think that's 33%. I don't really want to, I'm going to pretend like it's close enough. It's 30% pullback, something like that. Okay? So if traders buy here, buy more lower, the one thing they're going to want to do, and other traders are just going to buy more lower, what they know is very likely is a retest of this close. So what you want to do, if you're one of those traders, is you're thinking, okay, how are we going to test it? Are we going to test it like this? Bull bars, bad follow through, big bar with a big tail, and likely sell off? Or are bears not going to make money? Bull bar, more bull bars, more and more bull bars, and basically a micro channel. That's a pretty strong rally. So any bear selling here, maybe this low, maybe this high, might get trapped. And then look, we have a big bull bar. Well, this could be a measuring gap, and then we have a follow-through bar, and then another follow-through bar. Traders are trapped, and that's exactly what happened at the end of the day. Traders got trapped. So the bulls, and we got a measure move up, at a minimum. So again, I don't have much to say with this day. I thought this day was more easy than most days, just because you get a big bar on the open and it's a reasonable low of the day, but the risk is big. And you heard Al saying it's not a great trade, and I agree, it's a tricky trade because you might buy here and you may actually need to stop all the way down here, maybe all the way down here. So if you buy, you've got to use the stop somewhere down here, and you can't be worried about losing. It's 8 points, so you got to be okay with the loss potential. But it's parabolic wedge, so odds are you expect 2 legs down. Sideways to the moving average, we rallied. So we had a bull trend line break. Bulls get out. I'll review the actual always in a second, but bulls will get out and they're going to wait 10 bars, 2 legs, start to go sideways. Maybe we break the bear trend line here, pull back, somewhere bulls are going to start buying again. Bears are going to give up. Always in, you buy, maybe I would certainly get out below this bar. Second entry short, 3 pushes up, 1, 2, and 3. You've also tested that. You've gone all pretty much outside up, so reasonable to get out. If I bought here, I'd probably buy for a scalp and get out over here. You don't have to. I think it's tight enough channel. You'll probably get a second leg down. Maybe you buy here, but it's again it's a 4-bar micro channel, 2 decent sized bear bars. Not a great buy. Here, pretty big tail, not a great buy. Again, 3 pushes down, so maybe a spike and channel, or you can just call it a wedge. 1, 2, 3, nested within a larger wedge. 1, 2, and 3. Reasonable to buy. Maybe wait to buy here. It's moving average gap bars, and it's also one of those situations where bulls are going to buy here and they're going to buy more below this low and lower, knowing we'll get back to here. And that's in part why you got maybe this bar, maybe these tails. Really doesn't matter. And it's also bulls buying here, buying more lower, getting out up here. But it's a trading range. We couldn't get far below the moving average, went sideways, and we got trend resumption. So, hope this video helps, and thanks for watching.